The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Singapore's energy story is a fascinating one. We don't produce oil or gas at home, yet natural gas, much of it in the form of LNG, powers the majority of our electricity generation. That makes Singapore deeply plugged into global gas markets, from pipelines in Southeast Asia to LNG cargoes shipped from halfway across the world. But as the world races toward net zero, the role of gas and LNG is being questioned. Is it still a growth market in Asia or just a temporary bridge to renewables? And for investors, are gas and LNG still attractive themes, or will capital increasingly flow to alternative fuels? Well, to find out more, I'm joined by Lu Ming Pang, who is the Senior Analyst of Gas and LNG Research at Rystad Energy. Lu Ming, welcome to the show.
Thank you for having me.
Thank you so much for joining us. Well, Lu Ming, gas and LNG are not just about energy security. They're also big drivers of investment and market activity across Asia. For Singapore, a trading and financial hub, the way we source and price energy has direct implications for markets and investors. So how does Singapore currently source its gas and LNG, and how do different supply routes impact cost and pricing stability?
Yeah, that's a good question. So for Singapore, we're currently importing about 60% of our gas and LNG through seaborne cargo, so that's LNG, and the remaining 40% actually comes from the pipelines. So for pipeline gas, that's typically signed on a long-term contract with one of our neighboring countries, that could be Malaysia and Indonesia. And then for long-term LNG cargoes, that can also be signed on long-term contracts that can go all the way from the US or even from a nearer location like Qatar or the Middle East. But most of the time, we are on long-term contracts. Sometimes we do bring in some spot cargoes, which means that outside of a long-term contract, you can buy a spot cargo on the spot price when you need it.
All right, very interesting. So how critical is, gas and LNG to Singapore's energy security and daily energy consumption?
Yeah, so about 15% of gas and LNG use is for industry. The remaining 85% is actually for electricity.
Okay.
And if you look at Singapore's electricity mix, about 95% of that is electrified by gas. So meaning to say, if you don't use gas, you have actually not much of other sources to rely on. So as of present, gas and LNG is very important for keeping the economies of Singapore running.
Yeah, so it looks like gas makes up the bulk of Singapore's electricity generation. But the energy transition kind of raises questions about its long-term role and whether investors should see gas as, a bridge fuel or a fading asset. So from an investor's perspective, is gas and LNG still a growth story in Singapore and the wider Asia Pacific, or is it more of a, defensive transitional play?
Yeah, I think there's still a growth story going on for most of Southeast Asia. I think most of Southeast Asia is still running on coal, and gas and LNG is actually one of the ready ways you can actually decarbonize and bring in new energy sources into the country. Of course, it's not as clean as renewables, but you still need gas and LNG to power these countries in the meantime until renewables is achieved. So I do think there is still a case for some growth. However, I think the story has changed a little bit now. I think now when we look into 10, 20 years into the future, people are afraid that gas and LNG will be a stranded asset in 10 or 20 years. And that's why I do think that we need to see a more united strategy from countries. They need to plan for both renewables as well as fossil fuels such as gas together rather than just planning them individually.
So, Minister Tan See Leng recently mentioned keeping all options on the table for cutting emissions. So do you see a future where Singapore significantly reduces its reliance on gas and LNG? What alternatives could realistically play a role in the next decade?
Yeah, so I think what the minister has mentioned is a great strategy. You don't put too many eggs in one basket. You try to adopt as many strategies as possible. Right now, it's still 95% gas. But going down the line, we could see electrical imports from other countries. So we have renewable energy certificates we have given to Southeast Asian nations that can be transmitted to Singapore through an interconnector. That is one way to reduce gas imports. But for now, until that happens, we still have to rely on gas. And I think in 10 to 20 years, there's also talk of Singapore actually moving into nuclear energy. So it's not only relying on just gas, but also moving more into renewables and also possibly including nuclear into the mix as well. So it's trying to diversify that energy mix.
Right. Well, since we're talking about renewables here, globally the conversation is shifting to renewables as well. So in that context, why does gas and LNG remain relevant for Singapore and the broader Asia Pacific region?
Yes, so I think for most renewable projects in the region, there are difficulties in actually connecting these renewable projects to the grid. And for these grids to actually be built, it does take some time, so maybe about 5 to 6 years. It does require a lot of investment. So for some of these countries where you see renewables projects being located far away from the demand centers, it does mean that a more robust grid will have to be built in order to link up these places. However, if you look at some of the gas power plants, be it in Jakarta, be it in Bangkok, be it in Malaysia, these plants are already connected to the grid and they can provide power to these end users. So for now, there is still a bit of reliance more on gas and LNG. But going into the future, when the grids are diversified, the grids are built, we will see more renewables energy come into the mix. But even then, even with renewables in the picture, gas and LNG still has a role to play. We do know that renewables are intermittent. They do not produce energy 24/7. So at times when there's not enough wind or there's not enough sun, then you can count on these peaking gas power plants to actually power the nation.
Well, taking a look at the markets as well, I mean, energy markets are notoriously volatile. Supply disruptions, price spikes, and geopolitical tensions can reshape investment strategies of almost overnight. So what are the biggest market risks investors should watch when it comes to LNG sourcing and pricing here in Asia?
It's really been a roller coaster ride for the past 4 years. I think we've seen prices rise all the way to $50, $60 per MMBTU 3 years ago, but right now it's only at $10 per MMBTU. And in fact, what Rystad Energy is pricing in is we do think that prices have a more bearish future for the next 4 years. We think that prices will actually come down to about $7 to $8 per MMBTU, and that's actually good for Southeast Asia as well as new importers, because these importers in the region tend to be more price sensitive. So prices coming down lower is actually great for importers, but not so good for sellers or producers of the product. But even then, $6 to $7 per MMBTU, it's 50% higher than 7 to 8 years ago.
Right. Then more specifically, how do shocks in global gas markets ripple into Singapore and APAC pricing structures?
Yeah, so for most of the LNG that's actually coming into Singapore, that's already a long-term contract. That's typically priced against the oil price. So if the oil price goes up or down, depending on the geopolitical event, or if there's a supply shock or demand shock, then Singapore will also feel the impacts of those long-term contracts. But the good thing about long-term contracts is that you take the average price across 6 months or maybe up to a year. So even if there are shocks for maybe a week or two, it should not move prices too much unless it is a structural change. Now, the part where prices will impact the portfolio is when you buy spot cargoes. If you're fully exposed to the spot market, so you're buying 80% or 90% spot cargoes, and prices can actually change by about 10 to 20% within 1 week, then that would be a big weakness in the portfolio. So that's something to watch out for, especially for new importers who don't have a long-term contract.
Okay, makes sense. Well, the national oil companies, they remain dominant here in Asia. So how does their, market behavior influence the investment landscape for private players?
Yeah, so for most of the national oil players that we're seeing in the region, we do see them actually moving more towards an LNG-focused portfolio. I think for countries such as Malaysia, Thailand, Indonesia, you do see that these national oil companies are starting to invest more, not only in producing more oil and gas, but they're also starting to look into new terminals to bring in LNG, because it's part of their growth plan. They do envision a need for more energy, and that can be provided by gas and LNG in the meantime.
Lu Ming, overall, where are the opportunities? Is LNG infrastructure still a good bet? Do you expect gas and LNG to remain investable themes in Asia over the next decade, or will renewables and other alternatives start attracting more serious capital?
I think they are key demand centers, especially when paired together with renewables. We do know for a fact that it will take some time for renewables and batteries to actually be able to provide peaking and mid-merit power. In the meantime, gas and LNG can already meet that. So if you can actually get a long-term contract with a power plant, as well as secure a long-term contract for gas and LNG supplies into that power plant for the next 10 to 15 years, I think there is a very good strategy there.
So looking ahead as well, how do you see Singapore balancing its three competing priorities: energy security, affordability, and sustainability? And what does that mean for the future of gas investment?
I think without a doubt, energy security is the number one priority. And where possible, when energy becomes cheaper and it becomes cleaner, we should move towards the sources. So I do think that the current strategy for importing electricity, especially from renewable sources from other countries, is a great way to diversify our power portfolio. And likewise, 10 years, 15 years down the road, if you do want some energy independence, then nuclear is a good choice. For the surrounding region, I think everybody is also adopting the same strategy. It's going to be security first, followed by energy transition. So I do think that the strategy moving forward is to keep gas and LNG in the mix for now, continue to build renewables as quickly as possible, decarbonize as quickly as possible, and then we'll see how that goes.
Well, thank you so much, Lu Ming, for your time and your insights today.
Thank you.
Thank you. That was Lu Ming Pang, Senior Analyst of Gas and LNG Research at Rystad Energy. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.